Okay, here's what happened. A week ago, Bitcoin was trading around 28,500, sitting in the same range it had been for 9 months. But something wasn't quite right. It felt like Bitcoin was being held down unnaturally by some larger than life force. Turns out the larger than life force was option sellers that were positioned in one direction to the downside. And why not? They've been making the same trade successfully for months. But their naked short selling was becoming a noticeable anomaly in terms of how the market was structured. And over the past few weeks, word of the semi-naked short selling began to spread. And the market's awareness paired with ETF headline catalysts and TradFi inflows provided the spark to the powder keg. Now, once Bitcoin crossed 32,000, all bets were off. Suddenly, market makers were forced to buy Bitcoin on the open market to hedge their bets, squeezing the price higher and wiping out over $250 million in shorts over the span of just a few hours. Now imagine the impact for a moment. Market makers who sold all those contracts could be on the hook for hundreds of millions of dollars if they didn't hurry and buy spot BTC. So think of it this way. Imagine for a moment if BTC hit 100,000 and you need to pay up on hundreds of contracts you sold at 20K. That's a disaster. So now that this saga is behind us, I know what you're wondering. What's next for the market? Listen to this conversation between JJ, Ben Lilly, Ray, and Cody as they discuss, can this gamma squeeze for Bitcoin continue above 40K? Is it time to double down or let the market cool off? And what this means for price action as we head into 2024. And whether you're in the market or looking to get in, it's time to listen to this conversation. Welcome to Pit Action, where we analyze the crypto market and ask if there is a trade this week, all in less than 15 minutes. On today's show, Bitcoin's insane price action. What's a gamma squeeze? Is it time to load up on alts? And where is the trade this week? I'm joined by JJ, Ben Lilly, Cody, and Ray. Gentlemen, welcome. JJ, I'm going to kick it off to you. We've had so much crazy price action the last couple of days. Break it down for the audience because we want to know what just happened and where we're headed.
Yeah, I love it when a plan comes together. I have a lot to say about this, so if I start to get long-winded, feel free to interject.
I will let you know. But please go on.
So that gamma squeeze that we've been mentioning on the past couple weeks here, it finally hit, right? And we mentioned that there's a absurd amount of people that were short the 30K strike on BTC. And then obviously once we saw it move above there, price accelerated, especially when it got over 32,000 last night, as we saw hundreds of millions of short liquidations pile in and spot ramped higher, right? So the whole thing was spot led, and that was due to sellers having to hedge the calls they sell. So the reaction to that, we saw tons of bankruptcies piling up there on Deribit. Price obviously went higher. We shot up to the 35,000 range, almost 36,000. So right now, I think you just have to take it for what it is, right? And my kind of message here is don't believe the hyper FOMO. We still see a really strong DXY. I don't necessarily believe that it was BlackRock's or institutions accumulating BTC during that parabolic price rally. It was just take it at face value. And there was people that were short and they turned into forced buyers. And now here we are at a higher price. Where we go from here, the dollar still isn't showing that it's signaling risk off. So pair that with the kind of euphoria and sentiment right now, and I think it's probably a good time to take some profits if you have them on the table, and to definitely not be FOMOing in at these levels. I think worst case scenario, in a month or so, you'll get a retest of this breakout. So just sit on your hands.
JJ, I want to rewind back to a comment you made. You said these people were short. Kind of walk us through in a little bit more detail what you mean by that and why they were forced to buy spot.
So what they were doing, they were selling the 30K call contracts with various expiration dates, mostly November and December. So what happens is when price moves above $30,000, we don't know exactly how they were hedged, but apparently they weren't hedged enough, right? So when you sell a call option, your losses are potentially unlimited. So if you sell a 30,000 call option and Bitcoin's at, say, 100,000 at expiry, you're on the hook for $70,000 for every option you sold, minus the premium, right? So say they sold it for 2,000, they end up net down 68,000 per. So exactly how much they were short compared to how much they were holding to hedge it is unknown, but there was a lot of hedging that went on, obviously, and that's why we saw spot ramp up the way it did as perps kind of blew out. It seemed like they were trying to suppress the price for a couple weeks there, really pressing on short interest and moving the price down. And that all basically got annihilated in a single wick last night. So that's kind of the dynamic there, right? Is you have people that were short essentially Bitcoin's upside, and then when Bitcoin moves to the upside, you have to hedge it to protect yourself from unlimited losses.
Yeah, and I think for the audience, there may be an assumption that these people have pre-hedged, right? They've already bought the Bitcoin, they're ready to sell it if those calls are actually exercised. And actually, what we've seen, I think, over the last year is a lot of people were selling these out of the money calls with the expectation, or puts perhaps, or I guess it was primarily calls, with the expectation that they would expire worthless and they could a premium as revenue. Is that an accurate assessment of what they've been doing for about a year?
Yeah, we saw it like basically every time BTC was ramping up after the March rally, every time it was kind of encroaching on 30K, we saw implied volatility levels drop. And that was mainly due to people coming in and selling the upside because they felt like, okay, Bitcoin's already doubled for the year. It's kind of safe from now. Don't really expect it to continue on much further. All the things we've been discussing throughout this year, the dollar's extremely strong. So there was many catalysts piled up against it continuing further. Obviously not factored into that was Grayscale winning the SEC case, and then just kind of the headwinds we've seen in recent weeks in terms of the spot BTC, the market repricing itself for the BTC ETF, which it didn't seem to have. There was people under allocated, right? So as they start making buys, it pushes the price up, and then those people that were short calls find themselves extremely offsides because the volatility levels were not accurate of what it should have been reflecting if a spot ETF is coming to life next year.
Got it. Okay. So walk us through what we need to be looking at, what the audience needs to look at now, because I think obviously you see it every time you see a move like this. There's FOMO, people saying I've got to get in before it goes a lot higher. You were mentioning the Dixie. What do we need to be looking at? Is it the Dixie? Is it the options volume? What are you looking at, and where should other people be focused?
I mean, obviously keep your eye on BTC. It wouldn't surprise me if it goes up as high as 42K. That's not something I would necessarily be betting on here. Like, you already got this massive move. If you were lucky enough to profit off it, just take the profit, or at least a substantial amount of it, right? But there's potentially still juice to the upside. Say it gets over 35,000, we could see those gamma effects come back in. But it would, at this point, there's so much bullishness priced in, right? Like, you're really betting on extreme continuation here, which I'm not sold on, especially where DXY's at. It's pulled back in recent weeks, but it's still strong, still above 106. There's nothing that says to me that this is the final moment that you'll ever be able to buy BTC under 40K or so. I think we have plenty of consolidation here ahead. Maybe not immediately, like we can still see volatility to the upside. That wouldn't shock me, but over the long-term course of months, I think will be, worst case, you could buy a retest of this range, I think, by Q1. So no need to FOMO if you're a long-term investor. And if you are a long-term investor and you have allocations, it's awesome, right? Like, everything's kind of playing out the way we anticipated to. We have the institutional stamp of approval coming. It's a good step forward for Bitcoin, but in terms of FOMOing here, I don't see the upside.
So this week you don't have a trade that you would share with the audience?
No, I mean, you don't want to call a top here because, like I said, it could go to 40K. I think the move is to just wait and be patient. Cash is a position, so wait till you see some definitive risk off signs from DXY. Maybe if you're purely cash, you might want to get a small Bitcoin allocation just in case we are in some kind of end game thing here where it just blasts off and never comes. But I would assign a pretty low probability to that, maybe like less than 10%, that it just never returns from this range. I don't think that's what's going to happen. So just be patient.
Right. Be patient. Fair enough. Ben, I want to ask you, what do you think of this recent movement? And you're oftentimes looking at treasuries, or you're looking at more on-chain analytics at times. What are you looking at? What are your thoughts on this recent move?
Yeah, definitely. And that was great explanation, JJ. I mean, I agree with a lot that was just said there, especially when it comes to the options market. I feel like that part of the market, because you do have futures, you do have spot, you do have on-chain swaps, you even have on-chain options, and you have so many different areas of the market that you almost really need to focus in on to see if something is getting out of whack. That when it comes to the options market, it feels like this big mystery box for a lot of crypto traders themselves. And what we kind of saw, and it was almost as if that false tweet from the Cointelegraph intern, if you will, really set the table that, JJ alluded to this gamma effect, which is when all of these individuals, market makers or entities are selling these call options, when price starts to move in that direction, he alluded to hedging, and the way they do that is purchasing on spot. So that way they have Bitcoin on hand to go ahead and make that delivery when the contract expires, right? So they're purchasing Bitcoin to minimize their loss, and then price retraced right back down. So now they're like almost sitting on a double loss in their books because they were trying to hedge something that wasn't happening, and now they're holding a bag. And this just went ahead and blew that effect out of the water, which it was almost like it just kind of alluded to this effect being true in the market. And then with that news, anybody that was pulling that trigger just went ahead and capitalized on it. And it's hard to really understand how powerful these gamma effects can be, but this was case in point. It almost reminds me a little bit of the end of 2020 when we had that massive gamma squeeze that unfolded that was likely triggered by 3AC back in the time. So that was interesting as well. Now, as far as the rest of the market, you kind of have to let it play out at the moment because this effect did unfold. So the dynamics did change, and now the search and the hunt for the next dislocation or what's offside needs to unfold. In the ramp up to this week, you had CVD, which is cumulative volume delta on the spot market, which is essentially the more pure view of demand. And when you actually see that demand show up, it helps drive price out of a current range. And as far as like a mental model, the way I try to explain the importance of CVD spot is that if you want to move, say it's been trading in a range of 25,000 to 30,000, right? The derivatives markets can move within that range pretty easily. But if you want to go ahead and push price up and out of a range, that's when the spot market really comes into play. And when you see demand surfacing, as we've seen over the last week, and really over the past 48 hours, this was going off the charts on spot. I was getting messages saying, "Hey, did you check out CVD today? Because it is just going parabolic." And sure enough, price just kept ripping, and then it forced the squeeze to unfold. So it was pretty incredible to watch this unfold. And moving forward, I almost want to just see how much in terms of legs it has.
How much? Okay, so a lot there that you packed in. I want to ask the question, same that I asked to JJ. Do you think this is a time, as you said, let it breathe? Maybe it's time not to be looking for the next trade and allow the market to settle down a little bit before you figure out where to allocate?
Pretty much, unfortunately. If I had to look at something right now, at least for me, what I have my eye on is the ETH BTC chart. So over the past couple months, I've been talking about various expectations of the market. I think back in March or whatever, I was saying that Bitcoin price will drop below the 200-day moving average in either July or August. We got that recently, but then the next phase of the typical 4-year Bitcoin cycle, if you lean heavily on having analysis as I do, then the next phase of that cycle is essentially that Bitcoin milkshake moment where it just absolutely rips and liquidity just gets sucked out of crypto, which we have seen. And it went right into Bitcoin. The dominance chart went from like 50 to 52, 53%, which is a massive move on that chart. And this, looking at ETH BTC, we see that we're wicking below support, and it looks like it's meeting what it was almost a year ago. And if we actually go back to the last cycle, you kind of see these two vertical red lines here. What I was measuring out was the terms of days from the bottom of that cycle on this chart to the next halving. So I think it was about 140 days. And so we're coming up on that here shortly. And you have this chart almost mimicking what unfolded last cycle. So it's hard not to stare at this chart and just wondering when to pull the trigger as far as that next move. We had the Bitcoin milkshake moment. Liquidity got sucked right up into it. We don't know how long that effect's going to unfold, but this chart will at least give us the clue of when we should start kind of moving on, maybe one step down the risk curve, if you will.
One step down the risk curve. I like that. Okay, so milkshake is in effect, and we have to continue to monitor it. It's something we've talked about for any listeners. If you're new or if you're recurring, you know exactly what we're talking about. If you're new, we've got some episodes talking directly to what Ben just talked about in terms of the milkshake theory, but we want to continue to monitor that. Ray, I want to bring you up next. What are your thoughts on this move? Are you looking at a trade, or are you also doing what we're seeing here, which is to take a little bit of a breather and ask what happens next?
Well, it's been an exciting week, and I mean, it's only Tuesday, so more fun
Good start,
today,
right?
It's been a long month.
I think beyond the short-term trade being complete for a lot of people who may have opened a swing position around 23.5K about a month or 2 months ago, and the excitement of the key price resistance being broken through and held alongside all this ETF news, there's some structural advancements to note. So spot volumes have been strong, which is always a plus to see when price begins to rip and run. And today, CME futures volumes, well, actually last week, CME futures volumes doubled, which was notable. And then today we saw CME Bitcoin open interest surpass 100,000 Bitcoin. That's a metric which K33 Research and CoinGlass point to as being an all-time high. So, rumor has it and documents show that BlackRock is planning to seed their IBTC spot ETF. So if institutions and other big boys are buying up spot, they need to hedge that position. Hence the possible catalyst for the surge in CME open interest. So that's notable. I mean, when new all-time high metrics are hit, especially on that side, then it means something's happening behind the curtain, and this gamma move that everyone's talking about could have a little bit more duration than a lot of people might expect. From the technical analysis side, Bitcoin's 20-day moving average has slightly pushed above the 200-day moving average, and that's a positive move. But I think a lot of traders will be waiting for the kind of supposed all-important golden cross, where the 50-day moving averages moves above the 200-day moving average. So in terms of like longer time frame market structure, I would like to see some successive daily closes above the 31.7K level, above 32K. If we can hold above 34K, that would be amazing, because what's notable here is on the daily and even weekly time frame, if we can get higher high candles, that puts us at a level price-wise kind of above a key pivot point, and it puts Bitcoin price into territory that wasn't seen since May 2022. But in regards to your initial question about where do I think Bitcoin price goes from here, I do have kind of a caveat, but I'll take a breather in case anyone else wants to get some words in.
Well, yeah, no, I think that's a really nice breakdown, and as you talk about the structure at the higher level and then some of the break points as you just mentioned. I want to know, so in your head, does this at all, and maybe this is where you're going next, does this at all change your perspective on what starts to happen going in next year? For example, was this always kind of in your mind a high probability event that we would see something like this before the halving, but still see the price come back down before we start this, let's call this next bull run? Or is this starting to change your perspective as perhaps more institutional investors are coming into the market? As you just said, we've got some activity on the CME, which may suggest perhaps some hedging. Is this going to change your expectation for what happens with the halving and afterwards?
Not really. It all fits into the thesis that I've been kind of sitting on since 2017, to be honest. And I've already mapped out my kind of investment thesis for all of 2023 and 2024. So I look at the chart and been looking at this chart for 6 years. There's market cycles, there's fractals, there's historical performance, there's the halving impact, like the technical analysis and the Bitcoin market structure and the on-chain data kind of gives me a macro map on where I think Bitcoin price is going to go. I build my thesis around that. And then the unknown unknowns, these catalysts of mass adoption, ETF approval, Binance blowing up, whatever they are, they're in my mind space, but they have no time, like to be determined when they're going to happen is irrelevant to me. I just know that they are factors that can impact price, but my kind of view for Bitcoin's price trajectory and the way that I invest in it is already mapped out and set. So I've been saying forever, and I think JJ also, that it's either 23K in accumulation or it's 35 to 37K and further consolidation, potential for a blow off top around 40 to 45K if things get kind of frothy and euphoric. But most people probably thinking about either stupidly going long at 35K, but not looking so stupid if an ETF's approved, right? But of course,
Right.
at some point we come back down to retest that level. But it's either people stupidly going like permanent long with leverage at 35K and eventually getting washed out, or smarter folks who positioned a lot earlier looking to take profits at that 33, 34, 35K level, waiting to see how things go and playing that momentum. So I hope that answers the question.
Yeah, something to be aware of there, what Ray said, is like you have to see the catalysts before they appear, right? Like if you're buying here, you're kind of chasing what was being priced in over the course of the past couple of months. Like everybody knew this ETF was coming sooner or later. So now that that's here, like this kind of gives it gives that rally, and it gives the people that were positioned long for that rally an ability to take profits here and then kind of prepare for the next leg, whenever that may be, next year or so. But you don't want to be the person chasing. Like we saw so many liquidations yesterday, and the same way to the downside, like you don't want to become a forced seller at the lows. You don't want to be the person buying at the highs, because somebody else, it's not natural market action, right? There's like all of that pressure was built up, and then the people who were short were being forced to buy, which drove the price up. So you don't want to be on the other end of that.
Right.
I like to
FOMO
jump
ring.
in too, just add a little bit of comments on what JJ and Ray said, especially with the Binance comment. Like, as my understanding is, there's a lot of dry powder on the sidelines just within crypto. I'm not speaking to an ETF and retail capital or 401k capital coming in. I'm talking about crypto-centric capital sitting on the sidelines. And a lot of that has been waiting for the Binance situation to kind of play out, and it's progressing along. And perhaps there's not as much, like that conversation is not happening out in the open. So the clarity isn't there. So everyone's just kind of speculating on what they think is taking place. But as far as once that unfolds, that demand shows up. Then you have what's unfolding with BlackRock, which is positive news, positive sentiment, getting the coverage that takes place in larger mainstream media kind of circuits, if you will. It's those catalysts present just a lot of secondary or tertiary follow-up here that you can't really plan out and perhaps see on a chart and draw some lines and see that's the day it's coming. You have to be aware that those events can happen any day, and you just have to be prepared to act when that does unfold.
Okay. JJ, I want to give you the final word here just to wrap up. I think you said no trade
if
here.
I could.
Oh, I'm sorry, Cody.
Sorry. Yeah, if I could.
All right, go for it.
I would like to paint a more bullish view. So, like,
Send it, Cody. Send it.
I think everyone is kind of like glossing over the fact that we just broke out of a 7-month consolidation. Like, this 30K level in Bitcoin has been like.
Hey, Cody, you're gonna have to speak up a little bit more. I can't hear you.
Yeah. So we just broke out of a 7-month consolidation. We've been trying to go over 30K ever since April, and 30K has been a level that has been fought for multiple years now, ever since 2021. So it's like, I don't know, like as long as we're above it, I think you have to like either remain long if you are, or look for a a way to get long. And I think now, like, I agree with everyone here that like things are getting a little bit hit up. If you look at funding rates, if you look even at sentiment, like everyone is doing like victory laps and whatnot. But I think if this starts pulling down to like between 31 and 32.5K, I think you need to look at triggers for you to get long. Because these scam effects that Cozy was talking about, among other things, like are still in effect. Like these scam effects are still in effect, if I'm correct, until like 40K. This could be the thing that sends Bitcoin to that 40 to 42K level. That, like, if you look at the chart, it's like the next stop in the way, maybe even 45K, as Ray was pointing out. And I think one thing to look at is the order book depth. That gave you an indication at 25K that like there was a bottom being drawn out, and that gave you an indication also before this massive rally from 30K to 35K, and like this basically like unwind of short positions, both or like not outright short positions, but like these scam effects. And I mean, yeah, some people did have shorts on and got taken to the cleaners. But what I'm talking about is if you go to trdr.io, you can look at the order book depth for BTC and other assets, and that gives you an indication of how much money is sitting at the ask versus the bid. That is like how much money is sitting in limit orders waiting to buy and to sell. And if you look at Bitcoin on Binance at 25K, you had around 3,000 Bitcoin sitting on the limit to buy compared to the ask. So like there were 3,000 more Bitcoin waiting to buy than they were waiting to sell, just above price. And you saw that both at 25K during the bottom between August and September, and on the 23rd or so yesterday, just before this rally. So what, I don't know, I would like to say that like this might be like a really
we're not
bullish
bullish enough, is what
position.
I'm hearing.
Exactly. Yeah.
Like,
basically, you guys need to get a bit more bullish. Also,
Well,
because like
the bull
macro
bear
is
did
important.
flip bullish.
Trying to fade
today.
my own euphoria right now.
Yeah. But I don't know. I think everyone is too cautious. I think we've been.
That's
like,
a good thing though. Like that's what you
yeah,
need.
it is a good
essentially.
thing. But like you need
We
to be
saw it at
aware that
12K in
everyone,
2020,
yeah.
right? Like everybody was like, okay, yeah, it's at 14K, it's going to go back down. So this may be that like
Exactly.
you definitely have to have some allocation and have that possibility in your mind that maybe this is it. But would you bet the farm on that? That's where I would say caution. But you probably should be even more cautious if you have zero exposure, to Danny's point. Like this, it's been suppressed
If
for
you
so
have
long.
zero exposure, or like if you took some profits, I would look to like rebuy over the next few days, maybe
Mhm.
a couple of weeks, because there's still a long ass time until January, which is like the end date for the ETF to be approved. They might approve it before, and that would be a nice surprise. But even if they don't approve it or not approve it until then, there's like more than 2 months for things to run, for risks to run, and you are right now in the most bullish. Like from a seasonality perspective, the two most bullish months of the year are November and December, basically. So you're looking at that. As JJ said, the Dixie is not dying, but it's also not making new highs. Yields are not making new highs. I'd say that macro is important, but as long as macro doesn't go to outright shit, as long as Dixie doesn't start making new highs and everything, I think macro doesn't really matter that much.
We survived the worst of it already, right? Like that was,
yeah,
we made
like,
it.
okay, so I'm going to come in here because I think we've talked about a couple of those points, and I think what you're saying is the interpretation needs to be that there's more demand, which is some confluence to what you're hearing from Ben. You're talking about directly. We can see that in the order books, and people need to be aware that sitting on the sidelines may feel a little painful if we start to see more of a move up. All right, so I do want to.
One last thing to add there. I just want to say, if you take a look at Bitcoin's weekly chart, it's this is a 5-year chart, one of the cleanest breakouts I've seen in a long time.
Okay.
Straight through the Bollinger Bands, it just looks extremely bullish on these high time frames. So could definitely just continue to accelerate, have that scenario in mind as well.
That's the JJ I like to hear.
Ray, it looks like you had something you wanted to add maybe to cap this conversation.
Oh yeah, quickly. So Cody, I totally agree with you. Like it is a strong bullish move. It's very exciting. Anyone who's not positioned might be kicking themselves. And yeah, we should all be a little bit more excited, but also kind of like measure that excitement and remain rational, right? So the one thing I wanted to reference was an article by Caitlin Long that she wrote years ago for Forbes, and it's titled "Is Financialization a Double-Edged Sword for Bitcoin and Cryptocurrencies?" And the takeaway is that investors should be mindful that the ETF doesn't mean only up instantly and forever. It's going to take a minute for all these approved applicants to set up their buckets, roll out, get their products going. And after the initial wave of approvals, price could become volatile again in a way that people don't expect, right? I agree with you. There's a ton of pent-up emotion. And the one thing that everyone's been waiting for years to happen is looking like it's going to happen, hence the excitement. But to me, this market kind of response is like an orgasm, right? After it, people are going to get sleepy. They're going to get distracted. Other headwinds that
Beautiful
folks have
analogy.
looked past in exchange for like the hope of a short-term price upside might come back into play. So I think the strongest thing to remember here is that the trend is every trader's friend. Play the momentum, watch the momentum, but the froth is FOMO and typically like a take profit and exit signal. So the reality is no matter what happens over the next 2 months, there's always another buying opportunity and a variety of ranges. So I agree, order books are thin. People want more Bitcoin than is available on exchanges. Institutions got to go find these spot coins and like hedge. So sure, that's going to make price kind of volatile, and price
You have a
exploration could be
historic
fun.
analogy in all that, right? You have the gold ETF, approved in the US in 2004, and price over the next year didn't even double. And it wasn't until from 2005 to 2009 where price just went ahead and ripped and accelerated for multiple years. Like for what you mentioned before, like it takes some time for the ETF vehicle to actually attract capital and for essentially all those channels to be set up and kind of functioning as they're supposed to over time.
And
So to your
institutions
point,
know that, right? So they're expecting an inflow and then static flow, right? And price volatility. So I just think of it as the kind of situation when you're a kid and you really, really want this thing. And when you finally get that thing and you have it and you possess it, it's like perhaps not that important to you anymore. The desire to have it was stronger than the actual emotion of having it. So we could see that happen with the ETF, like huge price volatility leading into it on day of approval. And then over time, after approval, price impact beginning to wane, right? And then price consolidating, headwinds that we ignored previously beginning to have more impact on crypto prices and equity prices, and people averting their gaze to other things. So there's always another day, there's always another sale. That's why I'm not like super excited, because it's like my
mentioned the
thesis
lack
is
of
following
supply
where
there,
it's
right?
supposed to go.
And
Yeah, go ahead.
the GBTC trust, like when this turns into an ETF, that's going to be over 600,000 Bitcoin that's now available on the market. So is there enough demand to match that? We don't
that
know.
worries
And
me.
that's definitely going to dampen price a little bit.
Like that
So be
trust,
mindful of that. Like it could just be a massive sell the news event.
if that trust gets converted to an
Right.
ETF, like in the NAV, the net assets relative to what it's trading at is still negative. Like they have to go ahead and sell Bitcoin out of that trust into the market to make that NAV zero.
Pump it. Yeah.
So it's something where it can tamper your expectations. And I'm with Cody just as everybody else is here. Like even our bull bear indicator in house flipped bullish today. First time in a while. So it's hard not to be super excited, but there will be more opportunities. I think that's sum up a lot of the caution that you hear.
Keep yourself
Here.
hedged. Yep.
Okay. So I think what I'm hearing from you guys is there's no specific trade, although if you're not in the market, it's probably good to have some exposure to the market. If you've already been in the market a long time, this may be a good time to take profits. We should see over the next couple of weeks, perhaps even longer, as a settlement that we can get a better sense of where the new support is. and where we can start to set up those expectations. Obviously, we've got some other considerations on the long run where the ETF may be that double-edged sword. I think that's something to think about. So let us know in the comments what you're doing. Are you playing it the same way these guys are doing, or have you actually created some other trades? We love to hear them because that gives us something to talk about when next we come back. And that's going to do it for this episode of Pit Action, and we will see you next week. If you found this content informative, JJ is putting together a deep dive trading for crypto options that goes into even more detail on what you just heard. So like and subscribe to the channel so you can watch it as soon as it comes out. And thanks for listening, sharing, and commenting on the latest video.